The Kenyan market has really taken a twist over the past 2 months, but it's not a surprise because usually during this time of year we tend to see a lull in activity, and it's expected. And I think it's just a phase that lasts about 2-3 months and should end by February next year. But again, what we must note is that we have an ongoing rights issue, that's Kenya Power and Lighting Company, and this has swung some activity back up. And looking at the market, I think the fundamentals are still the same. Things are still as bullish as they were in spite of the lull. And I think we should see recovery from January and continued momentum from where we picked off sometime in October.
That having been said, we've got a couple of stocks still catching investor interest. As I mentioned earlier, KenolKobil share price movement, a positive move coming through there on the back of the company's outlook announcement. First up, what are expectations as far as that earnings report that's expected very soon is concerned?
That was really, I expected that. I expect these oil companies to be doing very well. Their results were really good for 2010. I think the results for their half year will be much better. They've had the exchange rate to their favor. It has played to their advantage. We must also remember that KenolKobil is one of the largest companies in terms of revenues it rakes in every financial year. So, and also looking at maybe the stocks at 9 shillings and 90 cents, it's fairly discounted for anyone looking to get in right now. Maybe the only problem they may have maybe is the temporary squabbles they have with the government regarding pricing, but I still think this should not be a worry that would injure the fundamentals of the stock.
Of course, where we've got regulation of the industry, under the spotlight at this stage over in Kenya, and that posing some concern in terms of its operations on the domestic front. Part of the company's forward-looking strategy involves investing in markets outside of Kenya. Is that viable in your opinion, where we know we've had many multinationals pulling out of the African region?
I think I don't see, okay, with the price controls, I don't think that would be enough to warrant something like that. I think that would be responding too drastically over something small. And if we look carefully, what this price, I wouldn't call them controls, it's a bit of a harsh word. I would rather use the word regulations. They still offer allowance for these oil marketers to make a profit. So looking at that, I think it would be a very unsound move for an exit. And looking at the multinationals that have exited in the past, they've had more to go with before making that decision.
Looking at the East African region as a whole, though, because we know that Kenya does have its eyes set on expanding further into the African continent, what are you making of that strategy and the kind of cushion that regional expansion could offer?
Regional expansion is always, once you exhaust your local market, the next step is the regional market. And I think for any company, this is a welcome move. Having most of its operations outside the borders, it goes to show that the company has matured to the level whereby it seeks alternative markets. And I think the market is there in Africa. There's a lot of demand for these products. And I think what we'll have to see maybe is a more comprehensive marketing strategy. And looking forward, I think it's a very sound move, and I think it will be rewarding in the short term.
Let's move on to a Centum investment company. It's injected $18.75 million into real estate in both Kenya and Uganda, and it's part of its plan to venture into high return markets. What have you made of this latest investment?
I think it's a good investment. The company is one of the best performing by its own right. Profit was up about 7 times for their third quarter. They have their investment in 3 key areas. That's quoted equities, private equities, and now they have the real estate. Again, looking at Centum as a company, they say that they wish to have, as a medium goal, more than 50% of their operations in Africa, outside Kenya, by the next 6 months or so. I think it's a good move. Looking at real estate, it's a very promising area to invest in. I hear they have acquired a peninsula in Uganda. They have also acquired tracts of land here in Kenya. Both for commercial purposes and also residential purposes. They have acquired about 100 acres in a suburban area here in Kenya. So I think we'll see value for these investments much later on in the short term. But one thing I would like to maybe ask the Centum company is, will we see the shareholder value? Because of late we've not seen these investments and this growth translate as shareholder value. Well,
of course, we'll have to develop or track developments there as they unfold. In September last year, we had the company, Robert, saying that it planned to raise $25 million through a bond, but the interest rate at over 12% didn't favor the company at this stage. Any mention of the company exploring that avenue once more?
I think that hit a dead end once they realized that they had another option, and that option is more promising, that option being real estate. And in my view, I think it's a better bet putting your money in real estate, and I think that's what they look to make returns on in the short term.